So good evening and welcome to RedCompass After Hours, a video podcast where the best and brightest of the financial services join us for a wee dram, let their hair down, unbutton their collars and spill their deepest, darkest thoughts and insights around payments. I'm Mike Truter, a partner at RedCompass, and each episode I'm joined online by my friend and colleague Julie. Say hi, Julie.
Hi.
We are also joined by someone who impresses us from the financial services industry. Say hi, Adrian Mountstephens.
Hi guys. Hi.
To delve into a fascinating payment topic. And to add a bit of spice and spontaneity, we don't yet know what the topic is. Instead, we're going to ask Adrian to select one from a huge list of topics. And then without any script or preparation, we will see where the conversation takes us. We have only one rule in this house, and that is that we need to be short, sharp, and to the point, like Scottish skiing do. The little knife that goes in the sock of the Scottish attire. So short, sharp, and to the point. We'll try and keep it to that. Okay, before we get down to business, let's make sure everyone has a suitable refreshment. Adrian, thank you so much for joining us after hours. Always a pleasure to have a chat with somebody who's enthusiastic about payments and brings color to every conversation. Can I ask what tipple, virtual or otherwise, you have chosen to wet your whistle this evening?
Yeah, so it's a real drink, but it is a very dull glass of water. It's a bit early in the day for me, and you certainly don't want drunk Adrian on this webinar. So.
I think the conversation might be more fun then.
Might have to go out a bit later in the evening.
Save one for later, always a good idea. And Julie, are you drinking anything exciting tonight?
No water, I'm afraid, isn't it?
Yeah, that's terrible. I think all three of us on water, what does that say about us? Anyway. Let's move on. Adrian, I'm really eager to hear which topic you've chosen. But before we get to that, would you mind sharing a little bit about yourself so that our audience can understand who you are and where you come from?
Yeah, absolutely. Thanks, Mike, and thanks, Julie, and thanks for inviting me on. It's really a pleasure to be here today. So yeah, Adrian Mountstephens. I'm working at Equinix, the world's digital infrastructure company. My job, I'm very proud to have it. It's a really great job. I get to work directly with the payments and banking sector, which is a fascinating sector to work in. What do I really do? I sort of bridge the gap between my business and the financial services sector, and make sure that all of the challenges and trends and digital transformation that's pushing its way through financial services, that my company understands how to support that. And really what we do for, I think it's about 1,300 financial services organizations now is and all over the world, is we support them through that sort of digital transformation journey, provide them with digital infrastructure at the edge of the cloud that allows them to build these hybrid multi-cloud architectures that are supporting the digital elements of their business.
So you're the foundations or the backbone, I guess.
Unashamedly, I call it the plumbing. We are the plumbing, and maybe we'll talk a little bit about the role of that plumbing and the changes that's going through at the moment as we explore through the topic.
Fantastic. Well, you get to choose the topic, so maybe we'll move on to that the moment, the big reveal. Let me throw up a little list here of topics for you to choose from. Hopefully a nice array across all of payments. Is there anything here that tickles your fancy that would be worthwhile for an after hours conversation?
Well, I think I'd love to do a speed dating version one day with you, and we'll do all of them in an hour. But I tell you what's a hot topic, but I'm going to kind of cheat a little bit, if I may. So if we look at embedded finance, that's something I'd really like to talk about, but I want to sort of mix and match. So maybe you can help me here. So we should definitely talk about embedded finance, but probably I'd drill into banking as a service and payments as a service. Those are really hot topics there, but we can kind of look at it under the umbrella of embedded finance. But we can't really talk about anything without talking about COVID and just the impact of that on the backdrop of everything we're seeing this year and undoubtedly into next year as well. So I'd kind of think we should have a go at that, if that sounds okay.
Sounds good to me. Julie, you happy with that?
Yeah, absolutely.
Okay, so maybe I can ask you, Adrian, why did you choose that topic? What's the reason that you think it's so important?
Yeah, if it's a personal fascination at the moment for me. So it's very current, particularly under embedded finance, just banking as a service. And what's really interested me is that this is a hot topic for a few reasons. I think, and in different parts of the world, it's a hot topic for different reasons. But if you look at the US, you've got Durbin Amendment sort of driving a hot area into banking as a service. Got lots of small, mid-sized banks who suddenly find themselves in a very advantageous position, and they're partnering with fintechs to build banking as a service stacks. That's just really interesting, just to how that market dynamic operates. Here in EMEA, you just look at what's happening this year specifically around this global pandemic, and what is the question that is on my mind and has been for 6 to 8 months is will the financial services community and all brands, will they view banking as a service differently because of what's happening now, because of some of the promises that it brings, right? You think about, speed to market, or access to new geographies, or flipping capex to opex, or just doing things a different way. So it really interests me, particularly in EMEA. Are we going to see an explosion in banking as a service and that uptake to get digital products in front of customers much quicker when traditional channels are coming down, digital is lifting up? So it really interests me from that sort of perspective. And I don't, will we see this growth there, or will we should throw the R word in, the recession word in, is that kind of going to go counter to it? So you kind of see these potential tailwinds, which could make this really exciting area explode. And you see these tremendous headwinds as well. So how's it going to net out?
Yeah, I think that's interesting, because it's almost two sides of the coin, isn't it? Like COVID has revealed how much everyone has moved the world online, and by doing that, I've shown how now it's easy to kind of offer financial services due to the democratization of the tech, bank offering license and so on. But on the other end, or other side of the coin, it's almost like in crisis time or in difficult time, you tend to stick with what you know, and you tend to stick with the institutions that you trust, which are effectively big banks, because technically, a lot of people still think that big banks are kind of too big to fail, and then my money is safe with them, my payment is safe with them, and so on. So you're right. I think when you mention balance and which one will wait, is definitely interesting to follow. I know which one I want to see winning, but I'm not sure it will happen.
Yeah, and you just want a side comment on a crisis. There isn't a bank that I talk to that isn't grateful that we're in a crisis that they didn't cause, and after 2008, and just that the impact of that on the industry, particularly on reputation and trust. To your point, Julie, that do we trust these big institutions? That reputational hammering after 2008 was horrendous for these big brands. And there's even, I won't name them, but banks who are still trying to rename themselves, to get out of the hangover of those times, right? So this is still going on. So I think that there's a kind of an acceptance we're in a crisis, and then there's a need to move through that really quickly. But the banks are doing it from a different position this time, but they still carry that message of trust that was undermined. Yeah. Because if you think about 2008, and this is one thing I'd say to any bank, or something that I hear from them as well today, is 2008 they took their eye off the ball, and the ball is the customer. Now this crisis, they cannot take their eye off the customer.
And
cannot.
I think it's been like, if this crisis compared to the 2008 crisis is totally different. First, it's like not a financial crisis originally, it's a health crisis. And then I think the response for the bank like has been completely different thanks to regulation, like, you know, everything is more backed. And also like, if you look at the communication, it's been around how do we make our customers safe? How do we make our employees safe? Don't think it was at all basically the dialogue in 2008. It was not like, how can we help our customer retain their house now that we totally screw up, you know? So
I want to ask a question here. So what's stopping the incumbents or the, you know, the legacy, whatever we want to call them, from using the banking as a service or taking that same line, right? There's nothing to technically stop them from a tech perspective being able to commoditize their stacks and leverage exactly what you know the new starters are.
Yeah. So there's a couple of examples. I think, Mike, you know, BBVA doing a great job of spinning up. You know, I think it's a separate business unit, but that's banking as a service. They've got that out there. There are other banks doing the same. Starling very cleverly, you know, take their own platform and then sell it. You know, there's some amazing maneuvers, but there's nothing to stop any bank from doing that in their own right. I think there's obviously questions around. We talked about it there. There's the kind of inertia of change. There's where they're going to spend their money. But of course, if you're coming from an incumbent bank with mainframe-based technology, spinning that into APIs,
easy, right?
You know, it's going to be that's a challenge to do right there. And then I think you hit a load of culture and risk, and you know, within the crisis, is this the right time to do that, or is this not? So I think that you know, let's just think, what do I know about, you know, IT budgets as well? We should talk a little bit there. The banks themselves, they're probably spending 70-80% of their budget just on the status quo, just on maintaining that. Right. So they got 20% for innovation. How do you do that? You know, I'm a great believer, if you're going to go to the casino, which I don't, but if you're going to go to the casino, don't spread your bets, go big, you know, and if you're
go big or go home, right?
Yeah, exactly. And I think if your budget is 80% of your IT budget is on status quo and you've only got 20% to innovate with, can you really go big? And I think that's why we see a lot of slowness or a lot of inertia or a lot of talk of innovation, but without any real delivery. And it's those challenges of the culture where they have to spend the money maintaining that status quo. And I should say again, because you know, I talk to these guys all the time. When we talk about transforming a legacy bank and transforming their core banking into a stack that could be API enabled and become a BaaS platform, you're talking about people's jobs as well. You know, hundreds and hundreds of people who are probably a bit grayer than me looking after, you know, these applications, and there's those decisions that you'd have to make as a business.
Human face, right, as well to consider. It's not just financial.
Yeah, so I just want to. So I see, you can see some banks are making the moves to build BaaS platforms. BBVA is a great example of how to do that. You can see others aren't. But I wonder, is there the opportunity for banks who don't do that? Is the opportunity for them to flip the model, and instead of being the license provider, they become the brand, right? And they could actually take advantage of the other BaaS players and play both ends. So, you know, banks could provide their license, like we see in the US with the Durbin Amendment. A bank could spin up a Starling or BBVA model and become a provider themselves, but they could also flip. They could also take advantage of these platforms that are out there.
Absolutely. That's the ecosystem play, right? Leverage the ecosystem that's available to enrich your product set or your services, right?
Yeah, get to new geographies, do things fast. I mean, why not? You know, and I'm sure Starling and BBVA do talk to other banks, and this does happen. But isn't that a great opportunity too for a bank to get new products, digital, into channels, fast? I mean, That's incredible.
Call me pessimistic here, but when we say like, what is stopping bank doing that? I think a lot of bank has a very, very, very messy infrastructure, and coming to a point where, yeah, sorry, oopsie, hey, I'm supposed to be French provocative, right? I guess like effectively when you say, yeah, let's move to an open infrastructure with API and so on, like it will take them years to get to this stage and then opening their basically like system. And I agree, like you mentioned BBVA and the starting of this world. I think there are great exceptions. And in fact, like ahead of the curve than BBVA have been for many years, right? They've been talking about digitalization of payment, I think, for almost 20 years now. So, and you're right, banks are only spending a lot of budget maintaining the status quo, but the current status quo is not good enough to offer banking as a service effectively. So I think banks should try to leverage on how do I use my 80%, trying to improve the infrastructure. And you have a lot of opportunity coming along, such as like, you know, ISO 20022 migration and so on. In fact, we did a video about that, like about some tips on how like some regulatory spends can be used. But yeah, I'm sorry, like on this, I'm a bit pessimistic, and I think like, unfortunately, don't get me wrong, great opportunity, great business opportunity, definitely way to go. But there is definitely a journey for me.
Yeah, I always worry that you know, too many banks take the wait and see approach. Let's wait and see how things kind of turn out. Yeah, so this technology, where's it going to go? Or let's see how that goes. But every day that you don't start the journey is like one day longer till you reach the end of the journey, right? Because it's going to evolve and it's going to change. And yeah, I really worry. I really like that idea, Adrian, the kind of hybrid model, right? So yeah, use what you have, right? You've got a solid base, a great foundation. Now let's see what you can do with that foundation to build your business out or find new opportunities, right? Because that's something the digital banks, the neobanks don't have in their favor, right? They don't have the solid foundation that they can really leverage and offer something potentially that's way in excess of what a new starter can offer.
Yeah, and I think that's
richer proposition, right?
Yeah, and that's a fascinating thought, right? If you think about where we are, looking at a recession, and I think I'm right in saying financial services is one of the worst performing sectors in the last couple of quarters. That might be in the UK, but you know, it's very challenging times. You're looking ahead, you're looking at bad debt and all of these things that come with a recession. So you're thinking, okay, as a bank, digital's going to be, you know, the way people interact, right? And even without COVID, if you don't understand what Generation Z are doing, they've never been into a branch. They don't fill in paper. They don't even know what a PDF is. You know, they're doing everything here.
Don't know what a
everything here. And Generation Z is now every year becomes the biggest customer base. All of us, whatever industry we're in, we should only be thinking about building proposition to Generation Z. And if the rest of us don't like it, forget it. But that's how important digital was going to be, which means all of us have got to get on TikTok. Mike, we got to get on TikTok, right?
We got for tomorrow, not for yesterday, right? That's the point.
So if just to finish that, so if you've got to go digital, whether it's COVID, Generation Z, it's just the future.
Your drivers.
Look, banking as a service can get you there so fast, right? You just think back 10 years ago. If I'm a big brand and I want to partner with a bank, I've got to do a white label project. I've got to do an RFP. I've got to phone up Accenture. It's going to take me 3 years, and I get it in test. I get something in test, and probably the CEO changes, and the whole project gets canned. You know, 3 years, nothing's happened. Okay, now what can I do? I can go to Railsbank, I can pop onto their APIs in their sandbox environment. I haven't even spoke to my boss.
Yeah, but I already have a proposition and I could do something.
Or signed a contract. I'm just there. That's how fast you can do it. And that could be any brand or any bank could go and do that. So you could build a proposition. Now, if you're a bank and you move into that hybrid model, you've got your customers too. But if you think about the way we are headed and everything's going to happen on an app, you said it, Mike. We can't let, you can't stand still. You can't let the world pass you by. You've got to be focused on digital channels, new propositions. This banking as a service allows you to specialize, right? Get really tailored products in front of audiences, partnering with brands to get to their audience, bring in your own customers, however you want to do it. But it's such a interesting
one word.
concept.
I'm going to interrupt you there because you keep mentioning partner, and I wonder if partners are probably the key, right? Here, because you can't do it alone. That's one of the things that is kind of different today, right? In the past, I could do this all myself. Today, we probably can't, right? And that's the whole concept of breaking up a bank into components, I guess, or different services that make up a proposition, which is different from the past. That means you can move fast, but there's a different type of complexity, and certainly those partner relationships seem to be kind of a key part of the glue that sticks it all together. Right?
Yeah, I kind of sometimes my thought process kind of gets stuck because this reciprocal relationship between banks and fintechs, it's now at the point where they need each other, right? There are fintechs failing. There are banks who are going to fail, and they're not too big to fail. They're going to miss the opportunities. But both parties need to be open to these partnerships, right? They've got to get past this cultural sort of, inertia, because the fintech community looks hugely exciting, but unless the businesses, the incumbents, are ready to make it happen, you can have the best idea in the world in the fintech community, but it'll never come, right? So
the synergy, right? That concept of synergy, the whole's greater than the sum of the parts. So the individual parts together.
I think we should make a bet tonight and see if we fast forward in 10 years time, we both mainly work with banks, right? Whether it's RedCompass or you, Adrian. I'm just thinking and today I read a stat from BIS saying a quarter of payments are not initiated by banks. So I feel like, let's say in 10 years time, we have the same conversation, how many of our customers will be banks as opposed to brand from the high street? Come on, bet open. What do you think? 30%, 50%, 100%?
I think in 10 years, it's gone. It's Generation Z. Ooh. It's just gone. It will be 70, 80%, right? It will be non-banking transactions triggered here by what Generation Z will be in their 30s, right? They'll have taken over.
I'm on your side. I'm also thinking 80, 90% at least. Yeah.
What do you think, Mike? Up there?
I think there's a lot of friction. I'd like to think I agree with you, but I also think things take time, right? And I wonder how much the regulator will allow the change to happen at pace, because there's always that dynamic, right? So we'll stick with what I know. I can only allow so much change at a certain pace before things get out of control and I've got to reel it back. So I think it might be a little bit more measured, but in my heart's telling me 80%, my head's telling me it'll take a bit longer.
But that's funny, your point about the regulator, because coming back to your point, Adrian, around COVID, if you think of the attitude of the regulator with COVID, and the CBIL, for example, they put Starlink on the list rather quickly, right? So I think when the market is crying for a change, regulators have no options than adapting to this change effectively and change the processes and the way of operating.
Yeah,
maybe parts of the world will respond differently, right, as well, though.
Yeah.
Yeah, I was just going to say, Julie, good point. I think, isn't there a story back from 2008 that Goldman Sachs got its banking license in a day? Is that right? I think way back then, and you're absolutely right. When needs must, we can shift things, right?
Yeah.
And the regulators can move. I also just want to throw in, I'm sitting here in London outside of the EU, so bear with me while I talk about the EU. But the EU is certainly looking at something they're calling the open data economy, right? So just they want 27 countries free flowing data under GDPR. That data is open with my consent for any tech. Could be fintech, could be any business, big tech. Anyone can work with my data with my consent. The EU definitely sees that, right? And they certainly have a vision for it. And what I see coming is, we've seen open banking and PSD2 directives, right? But I can certainly see more directives, regulations, guidance, advice coming from the EU into financial services to open up other and expand upon PSD2 to make more data available. I can also see them put in some sort of guidance together around big tech as well to kind of level the playing field, right? And certainly around public sector data too, right? Which they can
data for financial crime as well, right?
Yeah. So if you kind of project that 10-year future, to Julie's point, we're on an app, and that app's not just doing financial well-being.
It's a super app.
Yeah, it's a super app, right? And I can see more regulation coming from the EU, the Commission, to push this forward, because the benefits this brings are huge. So you can have banking as a service, open banking, real-time payments, platforms, all of these trends, which are kind of supported by digital transformation, disrupting the banking industry a bit. But basically, it's just going to put more power here, right, in the hands of Generation Z. And this future in 10 years' time, that's why I think it's just going to happen, is incredible. What power we could have. Every single business is going to need to be an expert in data, right? And I don't think financial services leads in that space, right? It doesn't lead in that space. But you could see the banking as a service providers layering data services as well, right?
Yeah.
And then that really makes these apps much more powerful.
But I think this is for me because you take this, yeah, you're right. This is a product today, but when you talk about data, the product, it becomes this, right? So effectively, on this, I'm hoping that the regulation will kind of help on limiting the product to this, or if it becomes this, then making sure that I'm aware that I'm also the product effectively, and what is the consequence of the data I'm sharing.
So great stat, Julie. Sorry, Mike. Great stat is Generation Z is more than happy to click a button and give its data, knowing that something's going to come back. The more grey you have in your hair, the less likely you're going to click that. My dad's going to be so terrified about what that consent button means, he's never going to click it, right? But I'll do it with some thought. But Generation Z, they get it, right? Yeah, they trade their data for product.
But have you heard about the biggest paradox of data, right? I heard it and it was funny. Everyone say, oh no, I don't want to share my data. In fact, everyone is doing it. Everyone is doing, whether you have gray hair or not, you're sharing your data. I think for me, the point is around more awareness. What is the consequence of sharing your data effectively, and will it create more polarization? I was reading recently an article about this, Mizuho starting to sell data, payment data, and they wanted to sell to the merchant and to restaurant, so that when you're being seated at the table, they will use your data to pick and select the customer. I'm I don't want to live in that world where basically people are going to be compared, and because I'm earning more than somebody else, or somebody is earning more than me, then I won't be seated at the table. Then that's where I think it's a business where we need to be a bit careful not to create more inequalities or disparities.
Goodness, I'm going to feel really bad now, because this conversation is just hotting up and I need to close it down, because we've gone well over our 20 minutes, but fascinating. I've let it run because I think we're really starting to touch on some really interesting ideas and concepts. Maybe we're going to have to pick this up with a separate discussion, because there's so many threads we can run away with here. But before we end, maybe I can ask for a kind of final thought, Adrian, from your side.
Yeah, just to finish off where we started, embedded finance. I think I've seen some data, looks like $3.6 trillion business by 2030, right? A huge opportunity. Let's see what happens.
Yeah, Julie, any thoughts from you?
Good question. So no, I agree with Adrian. Like, let's see where embedded finance like bring us, and I'm hoping that banks will realize the opportunity that Adrian just mentioned and like think of improving their infrastructure to be ready to move on this journey so that everyone can be a bank.
Yeah, so no matter what happens, the world is going to change, right? That's one thing we can be certain of. In 10 years' time, it will not look anything like we do today. And technology is kind of going to continue to drive, I think, that innovation as we change. So exciting times. Adrian, this is the type of conversation I have every day in the office with Julie. It's always exciting, and we get into these topics. Thank you for being part of our conversation today. It's always a pleasure to chat to you. Thank you also to our audience. We really appreciate your support for watching and listening. And if you enjoyed our discussion today, please do give us a thumbs up. We'd really love it if you subscribed as well and clicked on that bell to get notified when future content arrives. And don't be shy about giving us feedback. We really appreciate your comments and suggestions for new topics, and maybe also guests in the comments below. That's all for this week. Thanks for sticking with us. Catch you on the flip side.
Wrap up and go, and I can hear them in the background. Did you see my door went earlier as well? One of them was going to come in.
No problem.
He probably remembered. I have told them I'm recording, don't come in, but the door kind of went a crack.